Hi and welcome everybody to the Genus weekly video. This is week 29 and I am Grant Conway, Portfolio Manager at Genus, and joining me this week is Justin Hahn, who is a macro research strategist or analyst at Genus. Hey Justin.
Hey everyone.
So it's the final week of the third quarter and what a week it's been. Just as everyone's aware, Justin and I kind of have been building up to this through the week, and then obviously things changed last night with Trump testing positive. So it's definitely been an eventful week. But Justin, can you tell us a little bit about what's gone on in the markets this week?
Yeah, so this week we saw a sharp rebound in tech after the small correction we had earlier in the week and earlier in the month, actually. We saw oil companies broadly underperform the sector, with materials also lagging behind. Despite the number of issues going on in Washington, PMI still remains strong as the economy continues to be in the V-word reversal into the expansionary territory.
Okay, so basically staying on track for the recovery that we've seen so far, it would seem.
Yes.
And Trump testing positive last night or overnight, what are the implications for that?
Trump testing positive last night adds more uncertainty to the upcoming elections, but we don't really know too much more than that, as the fundamentals still remain strong. During these times of uncertainty, we, as always, like to focus on the underlying fundamentals and economic numbers, and those still continue to strengthen and show an economic recovery is in place. What we do know, it will likely hurt Trump's campaign a bit due to him really hosting these large rallies and getting more momentum and support, and that will be on pause for the next 2 weeks at least.
Yeah, it's not ideal from a Trump camp perspective, I would imagine. So Justin, on the politics front, we saw the start of the presidential debates this week. How do we account for those when we're investing?
So when we're investing, these debates are very minimal in terms of giving us any new information. So we aren't, again, counting on it for any big investment decisions. But we are noticing that the markets are becoming less and less concerned about a Biden victory and have rallied since the debates. We saw that Biden is trying to position himself away from the Bernie Sanders crew of the very left and move towards the center. And if he wins, although it is a negative for taxes, investors are seeing more positives in terms of fiscal stimulus. We'll see large infrastructure spending as well as re-globalization, hopefully, in terms of trade talk with Europe and China and all the other countries, and more stability there. The debate in general, going into it, Biden did have a slight lead, and after it, we didn't see any clear victory, so Biden by default came out ahead after those debates.
Great. I think there's been enough commentary. I won't try and reiterate what everyone has probably read in the press on the debates, but it's good to know how the markets are reacting to that. So thank you. And staying on the COVID front there, the case numbers seem to be creeping up all around the world. How is that affecting our decision making?
So in Canada, there seems to be some concerns about a second wave, with some provinces adopting some new measures, but we don't see it affecting the markets or our investment decisions too much. We believe the markets are looking through this and ignoring the second wave as there's help on the way in terms of vaccine, and we're better able to deal with cases as well as function due to the new conditions that we have. We also think that a giant lockdown, another full-blown lockdown, is unlikely, as we've been through it before and we see how much it hurt the economy, and we don't believe that the governments can hold that much debt and keep increasing their debt to help support the citizens.
That's good. And I know numbers here in BC have obviously seemed to have leveled off and maybe improving slightly, but there's still a long way to go, I guess. With regards to the job and the stimulus that we've seen that's helped people through this period, there's been a lot of renewed discussion in the US this week about the additional stimulus coming. Are we banking on that happening from an investment perspective?
Yeah, so we are hopeful that we do get a second stimulus bill to help the economic recovery continue its momentum, but we're not counting on it for investment decisions. The economy has been improving and has been improving for the past quarter, so it kind of helps mitigate the amount of impact and the need for the second stimulus bill. There are some positives coming out yesterday, especially with the Republicans with Steven Mnuchin coming out and saying they're going to move higher in their counterbid, but the Democrats are still looking for about 2.2 trillion, but there seems to be more talk and more need and want from both sides of getting the deal done. So the extra up 1.6 million for up from 1.6 trillion up from the 1 trillion includes higher amounts of stimulus checks as well as unemployment benefits that were seen in the first round.
Great. Well, and with regards to our portfolios, given that we've just gone through Q3 and statements will be out in a few weeks, can you give us a little bit of a preview and tell us some of the things that we've done in the portfolios through the third quarter?
Yeah. So from an asset mix perspective, we saw in quarter three, during the middle of the month, we moved some money off of equities due to the sheer momentum and the speed the market recovered. We took some money off of there and moved it into corporate bonds. Well, going into quarter three, we also saw, again, a large tech rally and outperformance, and outperformed the broad market in September. So within our portfolios, we've reduced some of the tech overweights and considering its great run, and we've moved the money into more cyclical names such as industrials and consumer discretionary sectors. In addition, we're closely monitoring the value trade to find opportunities when we see a full economic recovery unfold, and those stocks tend to outperform during that time period.
Got it. So to try and wrap all that up together, if I'm hearing it correctly, we still think that the economy is on a solid footing and it's going to continue to do better. There's obviously a bit of near-term choppiness with the politics and COVID that's going on. But we've positioned the portfolios to benefit a little bit from both sides, a bit more defensively, but also some of the consumer pickup and some of the growth that's still out there. If that sounds about right. So thank you very much for that, Justin. That's a very illuminating couple of comments there and just what we've been up to for the week. Thank you all for watching. And if you do have any questions, then please feel free to reach out to your portfolio managers and enjoy the sunny weekend. Goodbye.
Thanks, everyone.